Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, October 19th, 2017. From time to time, I like to do an overview of the Fang stocks, what I've dubbed as the Fang stocks, FAAMG, Facebook, Amazon, Apple, Microsoft, and the G for Alphabet, which trades under the ticker GOOG or GOOGL, depending on which share class. So the Fang stocks collectively they account for, I don't know what it is as of today, but it's always been typically more than half the returns of the entire NASDAQ 100. So therefore, if you get a good read on where the Fang stocks are going, you know where the market's going. Lately, we've had some charts lined up, a lot of uh, breakdowns, I should say, that aligned on all five of these stocks. Of the five, I haven't done a video in a while because there just hasn't been a lot to report other than Apple. I've posted quite a bit of updates calling for a correction in Apple, posting a rising wedge pattern on the daily chart, which we'll get to in a minute. We're going to start out here with the 60-minute charts, and that sure did play out. We had, of all the components, Apple's had the healthiest correction. It had a nine, almost a 10% drop. You can see off the highs. And again, we'll look at that rising wedge I was talking about recently that broke down. And more importantly, what's the near term and the longer term outlook for these stocks? All right, so today, the reason I'm doing this video is we've had some breakdowns across the board on the 60-minute charts, a lot like what we're seeing on the index. And that's not a coincidence. I mentioned when I did the video early, there just hasn't been anything much to report on the indexes recently. There were some trend lines and short term patterns and support I was watching, divergences and all that stuff that hadn't yet played out. So today we had some breakdowns. Only time will tell if they stick. Um, but as of now, they're still in effect, even though we had a little bit of a snapback rally so far in the broad markets. Now, here's Apple on the 60-minute time frame, and you can see going back here at this point, you can see the divergence is marked. We had a divergent high, and when you get in the world of the 60-minute charts, you can kind of hone in on entries and little areas if you're trading, trying to game bounces. If you're an active trader, look where to cover. You can see, we had a gap right here. That's a logical, very natural place to find support when you have a decent drop, especially when the primary trend is up. So it found support there, and it's rallied since up in this rising channel right here. You can see an ascending price channel on the 60-minute chart. And it's pretty well defined on the bottom too. As of today, we gap down below that channel. And Apple's been very weak. We've seen a bounce in most of the other stocks, and we've seen a bounce in the broad markets, some major indices today, but not in Apple so far. It's really, trading close to its lows here. Let's see where, there it is. There's the that's where we closed yesterday. There's where we opened today. So very weak action in Apple. It is, all these lines were on the chart beforehand. They mark levels. They're not just there randomly. So right now it's at support. But again, the bigger pictures we just broke down below this 60-minute pattern. The trend indicator, if you can see down here, you guys know I like to use these trend indicators. Still waiting for a definitive. Actually, we do have a cross there on the signal line. I use the signal line on the 60-minute chart. That's now flipped to bearish. The 1333 EMA pair has made a bearish crossover. Last time we were on a sell signal was back here. This was your last sell signal. And as you can see, just like it works well in the major indices, you get these sell signals here, you get the PPO cross, and it did a good job of defining that trend. And before that, it told you for the most part the trend was bullish. And from this point here, you had a bullish crossover right here on both those indicators, and it told you the trend was bearish there, bullish here. And as of today now, let's see how the day finishes. But we have a couple, you can see several bars on that histogram. So we've had several 60-minute closes below that level so far. So that's an early indication. And point being here is price comes first and foremost. I would never short a stock or anything or go long a stock based solely on a crossover of these lines. This is what gives you the buy or sell signals. This is just confirmation of a potential trend change here. So the breakdown, like I said, until and unless Apple can regain that level, and I'm going to go over an important level on the daily chart on Apple here in a minute, but that's where we're at. So the near-term outlook, regardless of any counter trend bounce, the near-term outlook, and I'm talking days to weeks right now, is bearish in Apple. Before I get too far on that, let me actually back up and just tell you something that we really need to keep an eye on. As most of you know, we're in earnings seasons now. Earnings season has just gotten underway. And again, these FANG stocks, I cannot overly impress the importance to the broad market. They're the darlings on Wall Street, and that's where most of the money flows are. So if they go down, those five stocks go down, you can almost be rest assured QQQ is going down, and if QQQ drops, that's taking the market with it most likely. So where I'm going with this is we have all of these five FANG stocks are slated to report within the next couple weeks here. In fact, we have three of the five reporting on October 26th. That's when the first of them come out. We have Alphabet, symbol GOOG, Microsoft, and Amazon all reporting on the 26th after the market closes, October 26th, so just about a week from now. And that'll be followed up with Facebook on November 1st and then Apple on November 2nd. So, point I'm trying to make, don't expect fireworks in the market until then because, typically heading into an earnings report for these big companies, they usually go into a holding pattern. There can be some movement. Sometimes you get a little bit of a ramp up, but I don't expect any major fireworks until we get those first three out of the way next week. So keep that in mind along with this analysis. Here we go. So let's move on to the next one. Where's GOG? I think I did the Class A shares with the chart. Yeah, there it is, 60-minute chart. So GOGL, the same stock, just different share classes. So the price will be a little bit different, but the charts will look nearly identical. You had a divergent low back here. That divergent low was followed by a little bit of a sideways trading range, and then the stock rallied. But it's come full circle. You can see a pretty decent trend line here and divergence there. So this forms a rising wedge pattern, and we gap down below it today. So that's the common theme, not just a breakdown, but a gap down below these pretty significant 60-minute levels here. Trend indicator has just flipped to bearish. You can just make it out there. You can see the little red histogram bars. We need confirmation on the PPO signal line. That's yet to cross. But right now, Alphabet's in a precarious technical situation, and it has broken down. And again, I'll go over the daily charts in a second to try to give you some price targets. Microsoft, 60-minute chart, you can see the same story. We exclude this we had a little whipsaw signal here, but other than that, the trend line comes in and captures quite a few reactions. So let's tighten it up right there. So you can see a lot of reactions on this trend line. I think this is the valid trend line here. So Microsoft has yet to break down. It's walking the line right now. Negative divergence in place. And we also have, if you want to be safe, if you're planning on trading any of these stocks or you're currently long, there it is, 77.33. You can see it's a nice little support shelf just below. So you might want to set a price alarm there. If that goes, then Microsoft's probably headed lower as well, at least in the near term. And again, these patterns could be foiled because the market may or may not go into a holding pattern. Anything can happen. That's the one thing I've learned about the market. But when you have all these major companies coming up to report in a week or so, like I said, my guess is they'll flounder around in here. Near-term bias is bearish. But again, if you weren't already short Apple before when it broke that daily rising wedge and you didn't catch the bulk of that 9% drop, would you short it now? Probably not. It's up to you. I don't think there's just not a lot of room between now and when they report unless you're willing to take that position home and into earnings. Otherwise, like I said, the stocks are likely to flounder around and not do too much until at least the first three report. There's Facebook. You can see back here we had a nice downtrend line. That's really not divergence. That doesn't matter. We had the divergence would have been drawn down below. I don't even know why that line was drawn like that there. This is the divergence. Maybe I was looking at a trend line to see when the trend broke on the indicators. But there's your divergence right there. So we did have a divergent low on Facebook that sparked that rally. Didn't go very far. And since this point here, we've been in an uptrend with a bearish rising wedge. I wanted to also point out these two peaks right here. So if you go back in time, let's try to do it this way. Okay, there it is. So you had these two peaks right around the level of 175 roughly. That was a second attempt to break out to new highs. So fast forward in time, boom, we recently popped above there. That's a breakout to new highs. I've been talking about this quite a bit. Volume has been unusually low recently in the markets, and low volume breakouts have a much higher rate of failure than those that are that are confirmed with 1.5 times or better average volume. So this breakout failed. So that was bullish or bearish technical event number one today when we gapped down, gave back that previous high. You can see the two reactions there. There's where we took it out. And it also broke down below this very clean, well-defined bearish rising wedge pattern. So that's puts us in a near-term bearish outlook for Facebook as well. Negative divergence confirmed those highs, and so that's all five of the Fang stocks on the 60-minute time frame. So if you forget about earnings, forget about everything else. That's what the charts are telling me right now. Now let's just take a look at the dailies and we'll wrap it up here. This is Apple. Here's that bearish rising wedge, divergent high. Posted this back when the stock was within it after it broke. And again, I already showed you it was about a 9% drop down to right about my first target here, reversed just a hair shy. Remember, when I put up unofficial trade ideas, I'm showing you the actual support levels. Official trade ideas on shorts, I always set my buy to cover orders just above the actual support level. Just as on longs, I set it just below resistance because it's very common to see a stock buyer step in below in the case of a stock that's falling below and I'm sorry, above the actual support level. So so far that's it. It bounced off the first target, had a rally, and now here's where we're at. See this big gap back here? We had a gap on August 2nd, and you can see this. This is the support zone now. These two lines, they were here beforehand. We moved down through them. We shot back up above them, and it did. We had a couple reactions there. So either way, watch Apple. It's pulled back now to support. There's the bottom of the support zone. But what's interesting too is you can see the 9 EMA, that signal line, the white line here is now back testing the zero line from below. And as I covered in today's video, I covered all the time that the zero line often acts as support or resistance when tested from above or below. So this is a key level for Apple. We're also at that right around the 50 level on the RSI, and that also acts as support or resistance, as you can see here, when tested from above or below. All those crosshairs I just showed you there. So that's it. We're at a pretty important technical juncture for Apple. The bulls are going to win. They can defend the support level. They can take that signal line back above the zero line, the PPO 9 EMA above there, and put the trend indicator back on bullish. Same with the RSI, keeping it above the 50 level. And otherwise, we go back down. We will see a rejection there, and the RSI will clearly move back below 50, and that keeps the outlook, the near-term outlook for Apple bearish. And of course, what you'd want to watch is see how the stock acts when it comes back to 48.19. Does it test it again, make a second test and move on up, or does it come back down there below there and hit that second target? For what it's worth, I'm still leaning towards this scenario. And when you look at the daily charts, even the weekly charts, there's a potential. Like I said, this is a potential gap, big gap back here, target zone, if that 142 level goes. So we'll just have to take it one day at a time. And I'm sure this won't be resolved, whether we're going to new highs or whether we're going to break down and come to this 142 level until after Apple reports. So we probably have a couple weeks there unless anything crazy happens in the market. Alphabet, this is a 60-minute chart. Let's see which share class I want to use. They're going to look the same. Basically, you can see negative divergence right here. There's a trend line that I'm watching. You can see it on both share classes. I have it in purple here. So Alphabet has a way to go down to that trend line. Just let's see what happens. Let's see if those 60-minute charts play out. There's also a little bit of horizontal support right around there. But again, the near-term outlook, I just made the case on all five of these is bearish. And if those 60-minute charts play out, then these daily charts, everything that I'm just covering right here, we're going to see, again, going back to Alphabet, we'll see it roll over here and confirm this is potential divergence. I should have made clear potential because at least in my book, until you have a actual lower high in the indicators, you only have potential divergence. Once the PPO makes a bearish crossover, meaning this blue line, the PPO line crosses down below the signal line, then you effectively have put in a lower high, lower than this high here. And that is what I call confirmed divergence, and then you have a much better chance of it playing out. Otherwise, these lines could continue to move higher, and take out the divergence, move up to new highs. So, like I said, if these 60-minute charts play out, this divergence will become confirmed. Then you shift, or I shift my focus away from the 60-minute time frames out to the daily time frames because those are good for swing trades lasting weeks to months instead of just days to weeks as they are on the 60-minute. All right, Microsoft, same story. All these charts are busy. I haven't really cleaned them up for this video. But there it is. You can see it continues to wedge on higher with divergence, potential divergence in place. I have numerous trend lines here. I would consider this one the primary trend line, the white trend line. We had a little whipsaw below it, but this purple trend line also captures a lot of reactions going all the way back here. Even this yellow trend line could come into play. There was it worked as support back here, but these two, when you see the white and the purple go, that'll be pretty bearish for Microsoft if that happens. Otherwise, the stock is in an uptrend and may continue to be for some time. And finally, there's Facebook. I've measured out the divergent highs here, and you can see the drops. This one trades is a high beta stock. You can make a lot on the rips and dips just swing trading this one, as you can see, 18%, 10%, 16% drop. We had divergences here. These didn't play out for too much. This one might not look like a lot, but it was still worth a trade. It was about 6% right there. And this is our most recent divergent high. It's a pretty powerful divergent high. It still needs to be confirmed. You can see the indicators pointing higher, the PPO pointing higher, but starting to roll over, just as the other ones were on Microsoft and Alphabet. And so there it is. So negative divergence, and I already covered it on the 60-minute chart. We broke down today, and the only one missing, I think, is Amazon. Did I not cover that? No, somehow missed that one. Let's go to the 60. Somehow I flipped off my group of Fang stocks. I don't recall if I covered this one in the video, but there it is. If I didn't earlier when we were on the 60-minute charts, you can see divergent lows here, a little rally. Most important is this bearish rising wedge here on the 60-minute chart. We broke down, clear breakdown right now on the 60-minute chart with negative divergence. Trend indicator has only just recently flipped to bearish for the first time since back in, it's been about a month. It was September 18th. Went bearish there and stayed bearish up until this point. And it caught also the bulk of this downtrend here, as did the buy signals that when it was green kept you long on most of these. So there it is. That's a lot of evidence on all five, not just a couple of these stocks. I'm seeing, again, breakdowns on the 60-minute charts. I'm seeing the trend indicators slip into bearish on the 60-minute charts. And then if we continue to see downside in the coming days here, especially leading into and then after earnings, then we start to focus on these daily charts. Amazon, as great a company as it's been, leading up to there, it's actually down quite a bit off the highs recently. If I can grab that reaction high, this stock's already dropped 14% from its highs back in July, and it's still well below there. So while the market goes on and chugs on to new highs, you're seeing leadership starting to break down. Not all of it, but some of it. And again, this isn't a meltdown. You're not going to see Amazon melt down with the rest of the market and the rest of the FANG stocks going up for the most part. But you have seen now Apple come down 9% off its recent highs, Amazon well off the highs and below trend. Here's our primary uptrend line right here. You can see it pretty clear. It was well defined. This was the measurement that I gave for the wedge. It's the widest part of the wedge. You add that to where the stock breaks down, and that is the technical measurement. Whether it gets there or not, that's all I can do is tell you what what this pattern would project to. It broke down. If we start to break down and come below these recent lows, we're looking at another, again, to the wedge measurement. And I don't always have my targets there. I'll take those measurements with a grain of salt, but then I like to align the my price targets with either price support, and there is some there actually. I should move this line. I should add a line right there as I'm looking at it, because you can see some gaps back here, reactions right here, reactions there, and that level's 688 right there. That's a potential for Amazon. We look at a weekly chart, and this really seals it up in my book. Here was a rising wedge back in 2000 that broke down in late 2011, 32% drop, and it was clear negative divergence. And again, we haven't seen negative divergence on the weekly chart since then. This is the first time. It's been years, but we have a very well-defined uptrend line. This uptrend line goes all the way back to about early 2015. A lot of reactions, very well defined, and we've broken down below that trend line. So it's looks like a early stage correction still on Amazon, and I think a lot of this has to do with the broad market has been holding up. So although Amazon is down and has dropped over 10%, you probably won't see the next major thrust down until the broad market starts to correct, and then at that point. Again, there's still a lot of meat on the bone based on the scope of this pattern, the scope of these divergences, and the fact that we've only dropped about, what did I say, 11% or so. And again, I put this target here a while back. Minimum target from wherever I put it at the time was a 36% drop, but I think we're going down over time to that 691 level. So that's it. Near term outlook certainly bearish. Temper that a little bit with the fact earnings are coming up. So it's up to you. Some people will position short in front of earnings in anticipation of a sell-off. And remember, guys, the final thing, and I'll wrap it up here, it does not matter what they report. It does not matter what their guidance is, how much they meet or miss or beat expectations. It's the market's reaction that counts. And not just the day of earnings. Keep that in mind too. You want to see what happens in the days following earnings. Sometimes you have a big pop up on bullish earnings. That happened to Apple a couple years back, and then boom, that marked the top of a 40 something percent bear market. That was the top the day after earnings, after they gapped up on a big earnings beat. And again, it was priced in the charts. That was all covered here at the time. So let's just watch and see what happens, and we'll take it from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.